Hey guys, welcome back to the Independent Investor Channel. It's the Big Apple coming to you directly from New York City, New York. It's so good to be with you. Thank you so much for tuning in. Again, this is part of a series of bullseye stock investing tips that I'm going to come out with. It's going to be a quick financial five of information. Overall, on the Independent Investor Channel, we talk about empowering individuals through the power of the self-managed Roth IRA account to allow people to keep more of a maximum benefit on their side. Traditional investing methods will render the investor back less than half of the potential profits that are due to that individual. And here we work on 100% of the profits back to the individual. So enjoy. This is Bullseye Tip Investing number 2. All right. The question I get asked all the time, do I invest money or do I pay down credit card debt? Guys, this is a really, really tough question to answer on a broad perspective, okay? And this is something that I've dealt with in my particular life, guys. I don't come from means, all right? I was loved and supported growing up, but I've made everything in life that I've made myself. I've had no help, all right? And there were certain times where I relied on credit in the event of an emergency, okay? But all too often, I find that paying off credit card debt or paying for a new car or taking that vacation or anything is used as an excuse not to invest, okay? Now, this depends on a couple different things, all right? I think a lot of what you can do in the investing world won't cost you anything at all, all right? Starting the self-managed Roth IRA costs you nothing, all right? And if you need that additional $25 to assist over here on the credit debt side of the house, and you've got a credit card that, the maximum interest rate on any credit card that I usually see is 29%, close to 30% interest rate, guys, that's going to consume you. All right, even a 15% interest or less than 10% interest. Most of the student loans out there of folks that I talk to run about 6-7%. All right, and you certainly want to focus on those particular debts before you look to, tax protect and wealth preserve money on the investment side of the house. With that said, I do not want to see this over here used as an excuse not to do this. All right, where I can say that you can do both of them at the same time, all right? But depending on your particular age, risk tolerance, and what type of credit interest you're carrying on this particular account, the way to deal with credit card debt is to overpay the minimum payment, guys, all right? If you're ending up here, depending on the size of the debt on the credit, you could be making a minimum payment and having that account actually increase with regard to the debt that you owe, as opposed to it coming down because you're not even making a dent in the interest, all right? So you want to overpay those accounts. And I'm talking about multiple hundreds of dollar payments to get these down into sizable range, all right? And a technique that I've used with regard to credit card debt is I would get that down to a manageable amount, right? Get myself practiced in paying those additional payments, $500, $600, $700 if I can swing it, right? If all I can swing is $300, $400, I'm aggressively paying that off, but getting it down to a limit where I can take a balance transfer, all right, to another account, which will give you an introductory time of 0% interest, all right? Now, what this allows you to do is take that remaining balance, put it on a new card, and they'll give you 18 months to pay on that. And that means that more of your payment, all of your payment, is going toward principal because you're not being charged interest anymore, okay? But I recommend that technique after you've got used to paying off that primary debt down to a sizable amount, okay? And you can't get overzealous, all right? You got to use this technique to your benefit, okay? You can't transfer that money and then get yourself into the same position that you were before, okay? The goal is to get that paid off, right? So you can sleep easy at night, okay? Then once we've done that, then we can come back and focus on taking those conditioned dollars that you've been aggressively paying on the credit card debt, and now we can start working on funding a self-managed Roth IRA account. All right, guys, I hope you enjoyed this. I look to identify a lot of preconceived ideas from beginning investors about comments that I hear all the time with regard to investing and concerns and certain personal financial situations that folks are in. And the series Bullseye tips are going to come out and look to address some of those ideas, and kind of further explain my particular perspective on some of these. Guys, thank you so much for tuning in. Hit the subscribe button at the bottom. Leave your comments on any topics that you might want me to address on this particular show. And look, guys, share this with anybody out there that you know can benefit from the information. Thank you for tuning in, and good luck in your financial future.